Hey guys, one of the people that I was talking to about investing, they were like, "Hey, we always hear you talk about the pros of real estate, but what are the cons? Like, what are some of the down stuff?" And I was telling them a couple of things, and I was like, there's really four big ones that I like to share, and I'll share them with you guys so that way you guys get it. The number one thing is it's a liquid investment. Like, it's a liquid. You're not going to get your money back tomorrow. So, I mean, even though it's a con, I personally see being illiquid as a plus because when you're illiquid, you're not a target. You don't have a bunch of money sitting around in the bank. You don't have a bunch of money in the stock market that you can liquidate every time you get scared. Um, Money comes up, I mean, situation come up that requires capital for an emergency. You don't have it. So you have to say no to that emergency and focus on the forward motion, right? Which is your business making more revenue. So that's one huge con of real estate is that it's in a liquid investment. Number two, it's very expensive. So primarily in my situation, we're looking at debt and equity. So we have to go to the debt market. That's Fannie, Freddie, a life insurance company, debt fund, banks, things like that. It is very expensive in these deals. So you're going to be, on a 70, 80, $100 million deal, which is the target range we're looking at. You're going to put down like 40%. So you're getting debt for 60% of that. So $100 million, you're borrowing $60 million, and you need to come up with another $40 million in equity, not including your another 4 or 5% for closing cost and operational cost and things like that. So it's an expensive investment. And if you don't have the facilities to kind of facilitate that equity piece, like us, we have a fund, or I mean, you can't save $40 million. So you're gonna have to put it together. So it is an expensive endeavor, real estate is concerned. Um, Number three, it's management heavy. You need a management company, professional management company. Even if you get a small deal, you're gonna have to deal with that. Um, that is a part of real estate. If you're going to have an investment, you're probably going to be management heavy, which means you're going to have staff, you're going to have contractors, you're going to have groundskeepers, maintenance people, leasing people, your actual management people who do the administrative stuff in your complexes because they're going to have a leasing office, they're going to have a unit, things like that. So there's a lot to manage these properties. And then last but not least, another con to real estate is it lacks volatility. You ain't gonna get these big booms and bust, or these big booms of like Bitcoin where it goes from like 80 to 120, or like right now I think it's down to like the 90s and 80s, and everyone's weirded out about it. You don't have this volatility, these big pops that you would in like another asset class. Real estate's slow, it's heavy. It's steady. It's not a get rich quick investment. It is a get wealth for sure investment, but that also means you're going to be in it for a long time. And that's the game that I like to play. I'm not a get rich quick guy. I never have been. I'm a create wealth for sure guy. And if that takes 5, 7, 10 years, so be it. I'm just going to wait it out because that's my game. And I'm okay with that. So the problem that I notice with a lot of people is they don't like that game. They're like, oh, because you watch all these other opportunities happen, but that's not investing, that's speculating. So you guys may have heard me talk about. So those are the four things that I look at as a con. But when we look at the pros, number one, it's proven. Talk about this all the time. Man, if you look back when Adam and Eve got kicked out of the garden, what'd they do? They went to go look for some real estate, right? So they can go make babies. It just is what it is. And so that's number one. It's a proven asset class. You can look at real estate historically and know that real estate, now we're talking about commercial multifamily real estate, income producing, has continued to climb the charts. Next, there's mass adoption in real estate. Everyone already understands real estate. Everyone's lived in a house. Even if you lived under a bridge, that was some form of real estate. Your parents lived in it, your grandparents lived in it, your great grandparents lived in it, your kids will live in it. There's a mass adoption to real estate. We all understand that people will always need housing, and that cannot be AI'd or roboted away. So, next. Three, it's stable. There's a high level of stability in multifamily real estate. Now I'm talking about best in class real estate, best situation, best locations. I'm not talking about heavy value add real estate where you have to create value by going in and changing something. I'm talking about institutional quality, meaning size and scale, but the class A level real estate, the one that has the amenities, the swimming pool, the gym, the business center, all of the amenities that people expect in class A real estate. Like that's stable. You're not going to have the ups and downs and things like that. Just like I said, you're not going to have the volatility of spikes. You're also going to have some steady Eddie type money coming in. Next one is my favorite one is it appreciates with rent. That is my number one driver. That is the thing that if I look at the world and when hell world is going hell in a handbasket for real estate as an investment is concerned, I personally believe rents in this country are going to continue to go up in my lifetime, my kids' lifetime, and my great grandkids' lifetime, so on and so forth in years too. So as an investment, real estate just provides that because of its housing. So the appreciation, the value of those properties are constantly going up because of the income. And if I know that rents are going to continue to go up, yes, they're going to be flat at sometimes. Something's going to happen in a situation where rents are going to level out or flatten or even drop. But I know they're going to come back. They've done that since 1945. They're going to continue to do that past my lifetime. So that's why I believe that's better. And because the rents go up, the value of that property goes up, and we can always capitalize on that. Next, it attracts cheap debt. Period, hands down. Lenders, Fannie, Freddie, like all of them are lobbying to put their money into real estate. Period. It's because it's a real asset, right? So if you go and borrow against your stock, let's say you have a trade account and you go to your lender or you go to your trade and you say, "Hey, I want to borrow against my stock." They can lend you against your stock, but they're going to take a real look at that stock and say, what quality is the stock or what quality is the company of the shares that you're owning in this as stock. Real estate, way different. They're going to look at the property, the income, the expenses, the T12, which is the trailing 12 months, and it can go way back to 10 years. And they're going to say, hey, we'll lend you X dollars, especially for us because, and I'll get to that next, we're looking for cheap debt. You know, right now, I think the interest rates are probably pushing around 4.95%, maybe five and a quarter, maybe a little higher than that. Um, and it could go down to 3.75, 4%. Like I think that's average, but real estate attracts cheap debt. That's better for you as an investment because next you have better leverage. So leverage is the next one. You can get leverage. That means every $1 buys you $3 in real estate or $4 in some markets, but for us California, high price markets, low cap rate markets, $1 buys you $3 worth of real estate. So you have leverage with debt. So you figure if you can invest a dollar and that dollar is now worth $3, that's better. And it's secured by real asset, something that's a hard asset. It's an alternative asset to the stock market. If you buy $1 in stock, that stock is worth the dollar that you paid for it. It's not worth more the day you close. So that's why I like the leverage because your investments always have leverage. Your dollar version is worth more because it's tied to a real asset. And last but not least, this is probably this is the party hound for real estate is the tax advantages. So you get the tax advantages of real estate. Like if you're doing your own stuff, you got the 1031, you got depreciation, you have bonus depreciation, cost segregation. You also get what's called the tax advantages. So let's say we have debt on a real estate deal and we have interest on the real estate. We get to write off the interest paid on there. And because it's called the debt buy down. So like as your debt goes down, then naturally you have more equity when you sell, right? So the tax advantages allows you to do that. And oh, by the way, if you're getting passive income from these deals, you get to, because of bonus depreciation and depreciation in general, you get to write off sometimes all of or the majority of the income that you received and show that as a loss, even though it's just a paper loss, it's not a real loss, but the tax code is written, I would say maybe 80% of the tax. So that said, that's a huge one. I ended on tax code is specifically for real estate. So, anyways, I wanted to share that with you. I thought that was important for you guys to get that because someone asked me about that. Those are my things. Cons, I get it. Cons are a little tough because everyone wants to know. I mean, I have a business to run, so I'm going to tell you about the good things, but I don't mind telling you about the bad things, man. If it's a liquid, you can't just readily get your money out. If you're thinking about investing and you can't leave your money in there for more than, I would even say 5, 10 years, 7 years, whatever, like don't do it. It doesn't make sense. That's not what we're looking for. We're not looking for in and out investors. So if that's a problem for you, don't do it. It's very expensive to do. You're not just going to buy a real estate deal. You can't just get rid of it tomorrow, press a button and go, hey, I need it, sell. Like that's not how this game works. That's stocks. That's mutual funds, that's maybe your trade account or something like that. That is not a real estate mindset. It's management heavy, like I said. That's a huge con. You know that you're gonna have to oversee the asset, and you're gonna have to oversee asset meaning the performance of the property for returns. And then you're also going to have to oversee the management of the actual property itself from real estate. And then, like we said, it lacks volatility. You're not going to get these big bangs. You're not going to be like, hey, we bought something for $70 million and tomorrow the stock market went up and it's worth 140. Like that doesn't happen in real estate. Like it's slow, steady money, but it's get wealth for sure. So wanted to share that. I hope that makes sense for you, but I wanted to yeah, I'll text him back. I wanted to make sure to kind of express that because I told my buddy that we were talking about investments, and these are the cons. Those big four. The other ones are pros that you hear me talk about all the time. So if you have any questions, let me know. Here for you. If you want to invest with us, go to bell-capital.com and you can hit the button there that says get started. You can check a look at our open fund that we have. We're doing a heavy fundraising activity for our open fund right now. And then also, if you want to schedule a call with me or somebody on my team, go ahead and hit schedule call. Those calls last about 10 minutes. Answer any questions that you have, get you started and or get you, answer any questions you have about the paperwork, the fund, the timeline, our target returns, type of deals we're going to be investing in, and any specifics you have about yourself, whether you have money in a 401k, an IRA, and you want to see if that money qualifies to roll over into a self-directed to invest with us. I'm here to help you with all of that. We have those facilities set up to be able to do that, and we can point you in the right direction and get you started. All right, so if you need anything, let me know. Like this video, share the video, comment on the video, leave it in comments. Like, what about these cons do you just hate? Is it the illiquidity, like you can't get your money, or is it like the lax volatility? You need these big bangs and pops. The management problem, very expensive. Like which one of these cons stand out to you? You as an investor. I'm not talking about you doing your own deal. I'm talking about investing your own capital. Like I'm here for you for that. That's the people that I'm communicating with. As they want to know those things, and I'm sure you do too. But I want to hear your feedback on that. So let me know what you think. Let's get after it today. Have a great one. Boom.